Vertical takeoff and landing aircraft have been under development for a number of years now. A couple of companies are public, Joby Aviation and Archer Aviation. And those two companies are actually getting some really good news, getting some new funding to advance their products and build what essentially amounts to an air Uber system or an air taxi system. These are networks that could be built all around the world. The initial idea is to roll these out in regional areas. So go from the airport in New York to Manhattan, fly from LAX to other parts of Los Angeles or San Diego. But there is a much bigger vision that could potentially happen as these vehicles become powered by hydrogen and electricity, as the technology behind them get better. Lots of optionality, lots of asymmetric potential here. These are not stocks that I've covered much here on asymmetric investing, but as we get a little bit closer to actual revenue generation for these companies, something I'm going to be peeking into much more here. I want to get into the latest news, some really big news out of the FAA that will actually put these companies on a path to real commercialization. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content, and thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. First, I want to look at Joby and Archer stocks because these have been really hot lately, but let's pull back a little bit what these have looked like on the market. This is Joby Aviation's stock price. You can see that over the past year, stock's up just 2%. It's been all over the map though, down as low as about 477 just a few weeks ago, then bounced. I'll get to some of the news that caused these huge movements. And then if you go to Archer Aviation, stock is actually down 28% over the past year. But like I said, we're getting closer to commercialization for these companies. And there was some really big news out of the FAA that caused some of the recent bounce in shares. And that was pilot certification and operation clarification on what companies need to do to meet FAA requirements. This is the executive summary. It says that the final rule establishes the requirement for pilot certification and operations of power lifted, and this is the VTOL, vertical takeoff and landing vehicles. And it says that there are several applicants seeking certifications for such aircrafts. So these are all pre-revenue companies essentially, but they're getting to the point in 2025 that they're going to get either to commercial operations or very, very close to it. So the FAA wants to create rules for transportation like transporting crew and materials to offshore oil rigs, transporting passengers from point to point as an air ambulance, transporting passengers in concentrated urban environments. And so basically this document outlines what the requirements are going to be for the pilots and then also for operations of these aircraft. So this gets us much closer to the point where you can actually see aircrafts like this. This one is from Joby, flying around, taking, in this case, as many as 4 people on short point-to-point trips. There's a possibility that 5-10 years from now, these are much longer trips, hundreds of miles, and those could even be autonomous. But right now, the first step is just getting these things off the ground. You can see this is their vision. This is a graphic for New York City. So flying from a downtown heliport to the JFK airport 7 times on a Joby versus 49 minutes in a car. Archer is doing something similar. This is a map of where they want to fly in the Los Angeles area. And this is an air taxi network that they're planning ahead of large sporting events, saying it could be in operations as early as 2026. So again, that's the vision behind these companies. It isn't a reality yet, but that's potentially what they're building. To get there, what do they need to do? One of the things they really need to do is raise capital. And that is one of the things that we've gotten a lot of news about recently. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. Earlier in October, Toyota said that they would invest $500 million in Joby. This is in an effort to build out their commercial operations. And on top of that, so the Toyota news was actually received pretty well by the market. This was not received as well by the market. They offered shares to public investors, 40 million shares at an offer price of $5.50 per share. Like a lot of stock offerings, that was done at below the market price. So this is when this was announced. That's why the stock dropped last week. But overall, the idea here, and if they're going to get this $202 million that they expect, that is going to help them fund certification process manufacturing efforts, prepare for commercial operations, and for general working capital and general corporate purposes. This is the fundraising that companies do as they're getting closer to commercial operations. It was just back in August that Archer closed a $230 million capital round, and that was from strategic investors like United Airlines and Stellantis. So these are big companies that are very interested in what these companies are doing. They can be partners, they can help build their network, they can help build their manufacturing, and all in the effort to try to get these vehicles, these aircraft off the ground as early as next year. But that gets to the financial challenge that we're seeing with all of these companies. And this is what's kept me out of the industry so far. Now we're getting to this point of inflection where we should start to see revenue actually coming in starting next year. But these are pre-revenue companies, and that's what makes it challenging investing in them before they actually are operational. We don't know what the economics are going to look like. First, let's take a look at Joby Aviation, and what I have here is revenue. You can see that that almost doesn't show up on this chart, just $1 million in revenue over the past 12 months. And free cash flow, negative free cash flow of $400 million. This is the challenge with this business. They're not generating any revenue. They're burning a ton of cash getting through the certification process, building out initial prototype vehicles, getting ready for that commercial launch potentially in 2025. Archer Aviation, very similar story. They don't even give a revenue number in these charts that I'm pulling from FinChat because there is no revenue, but negative cash flow is similar, $380.8 million over the past 12 months. Now, the valuation of these companies is also a little bit different. Joby Aviation, as I'm recording, $3.9 billion market cap. Archer Aviation, $1.1 billion market cap. Now, that sounds like maybe Archer has a little bit more upside. Actually, the way that I look at that is Joby Aviation actually has more opportunity to raise capital. And this is one of the challenges in this early phase in this environment is you need to be able to access capital markets, raise $500 million, maybe even another $1 billion to get to actual commercial operations where you're able to prove out, hey, this really works. There is an ROI on individual aircraft. And now we're going to scale this up from building one per month to building 100 of these aircraft per year, or even more than that. But right now, keep in mind, this is a speculative investment. And that's one of the reasons that I'm interested in it is we don't know exactly what the opportunity is, but we're talking very, very small about where these companies are going to be operating in the near future. But the opportunity is much, much bigger than that. It's not going from Manhattan to the JFK airport. It's going from Manhattan to Philadelphia or Washington, D.C. It's going from San Francisco to LA. It's going from Paris to London. There's a ton of opportunity if you can actually get this work, get the economics right, and even start flying these aircraft autonomously. Joby Aviation bought a company recently that could allow them in the future to fly these aircraft autonomously. That's a really interesting advancement. So we're getting there with this market. Should start to be proven out in 2025 and 2026. Not stocks that I own yet, but I'm definitely looking at potentially adding a basket of these stocks just for their asymmetric potential. If they are able to build out a brand new market, these are the kind of companies that can build network effects and have really, really strong positions in the market. Remember, aircraft and even helicopters, there's only a couple players in those markets. And so if you're able to be one of the leaders, that can be a really strong position to be in. But let me know what you think right now about Joby and Archer Aviation. Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.